Since the creation of the internet, every industry has been turned upside down. Amazon changed retail. Uber changed transportation. YouTube changed video forever. With the invention of crypto, money is next. At the speed technology is growing, the future of money and securities are digital. 9 out of 10 millennials do not trust banks. The value of money relies on trust. Government debt is higher than it's ever been before. Central banks continue to print money. Fortunately, the world has a new solution. Experts predict in 7 years, 10% of the world's economy will be in crypto-based assets. Today, 1 billion people have access to the financial industry. Crypto is about empowering the other 6 billion people by banking the unbanked. Do not underestimate this. Do you wish you invested in Google, Amazon, or Netflix before anyone ever knew about them? $1,000 invested in Netflix turned to over $500,000. At Token Metrics, we help you find the next Netflix. Token Metrics users think differently about investing. They are early adopters looking for financial freedom. They are people who see a better world. A world without international borders. We believe in a world where everyone has access to the next financial revolution. At Token Metrics, we are creating a bridge that gets you to that revolution. We will help you make sound investments in this new world. The world's best investors do not rely on their intuition. They embrace technology and AI to invest. Token Metrics uses AI to find invisible patterns in data to help you invest and trade in crypto. In the past, we have used our data-driven system to achieve financial freedom. Now, we are giving you the keys. We created Token Metrics to be the only platform you'll ever need to make money in crypto. We give you AI and access to crypto experts at the best price. The moon is not the limit. To the moon and beyond.
Disclaimer. Token Metrics Media LLC does not provide individually tailored investment advice and does not take a subscriber's or anyone's personal circumstance into consideration when discussing investments, nor is it registered as an investment advisor or broker-dealer in any jurisdiction. Information contained herein is not an offer or solicitation to buy, hold, or sell any security. The Token Metrics team has advised and invested in many blockchain companies. A complete list of their advisory roles and current holdings can be viewed here at tokenmetrics.com/disclosures.
All right. Hello, happy Tuesday, everybody. This is a very, very big day, a monumental day. And as we like to say here on Token Metrics,
we just landed on the moon in the Lambo.
This has been long awaited. We even had to bring on Jad, our quant, on this live stream, his first live stream ever. So let's smash the like button for him. Welcome, Jad.
Thank you for having me.
Yeah, so, as the title of the stream says, we have made a visual trends indicator using machine learning that we think can be used to help predict the crypto market. It may seem like a big claim, but we'll go through why we think this is monumental, right? So the live stream will go for about half an hour, 40 minutes or so. We also have other live streams coming in, right? But if you're tuning in for the first time, be sure to smash the like button, subscribe. We'll go through intros real quick. My name is Ian Delina. I'm the founder and CEO of Token Metrics. We're a crypto investment research company that helps crypto retail traders and investors leverage machine learning and AI and data and analytics to become smarter investors. And My background comes from IBM Watson Analytics, where I was there for 4 years, basically helping regular people leverage the power of machine learning in everyday roles, from IT to finance to sales and marketing. And now we're doing this in crypto, and that's where I'm in love. I love crypto. I love finance. As an investor, I love making money, right? And for us to now leverage machine learning to become smarter investors, that's the holy grail. So with that being said, let's do a quick intro as well for Bill. Bill, go ahead.
Hi, I do the technical analysis for the Token Metrics group. My background is in legacy, where I did 12 years at Goldman and 4 years at Morgan Stanley, specializing in providing guidance and navigation in highly volatile markets, which suits me for crypto because it's that way every day. I got my crypto cred from starting with Charlie Shrem in 2017, survived the bear market, and signed on with Token Metrics as soon as I could.
All right. Thank you, Bill. Let's now go to Jad. Jad, do a quick introduction on yourself.
Yeah, hi everyone. So my name is Jad. I have a background in financial engineering. I'm really passionate about trading and investing in general, and I got into crypto in 2017, and I joined Token Metrics last summer, where I've been working as a quantitative analyst, basically working on building profitable portfolios and coming up with some trading strategy like the one we will explain today, and working with our machine learning engineers to optimize everything. Very excited to be here today. Thank you for having me.
All right. Thank you, Jad. Yeah, so Jad has been very instrumental in building everything, right? Jad is our quant analyst, and he's basically responsible for all the financial engineering behind the scenes. And he helped really launch the indices, and now also launching the visual trends indicator. So without further ado, let's hop straight into, first of all, why is this something of value? What problem is this solving, Jad?
All right. So this is solving the problem of coming up with good entry and exit levels, having an idea on how the market is trending and not. Because when I first started trading, I wanted to look at if I can identify some patterns in the price data, come up with some good entry exit points, but it just felt extremely hard. And then I started looking at indicators like moving averages, Bollinger Bands, RSI, and all of these indicators to try to optimize my trading, but without a lot of success. When you actually test all these indicators, you see that they have lots of problems. For example, some indicators trade way more than you want to trade. Here is a good example of Bollinger Bands, for example, which is a very popular indicator in crypto, where you might feel that it's a good strategy to follow when the price hits the top band. It's usually a sell signal, and when it hits the bottom band, it's usually a buy signal. But like I said, when you look deeper and backtest it, you start realizing that wow, there's so many problems. You get so many buy and sell signals that are not accurate. You lose big rallies. You go out when you don't really want to go out, and you stay in when you really want to go out. So if you had RSI, for example, here, it would definitely show that Bitcoin was overbought, but you actually wanted to catch this rally. Same thing with other indicators like moving averages, where it might look like it's accurate, but actually when you backtest it, you get something similar to this. You lose the rallies, and you're always in the prices that are going down. So it wasn't very efficient. We realized this problem. So with the help of our engineering and machine learning team, we looked at over 100 different trading indicators, identified which ones work well and not, at which market conditions they do work well and not, and how we can combine them in a complementary way. And this is what we came up with at Token Metrics. We managed to combine all of these indicators through machine learning. And this is the final product of our work. This would be on our website. This is a good example of Litecoin because you have a bearish cycle and then a cycle where the price is kind of ranging, and then you have a bullish cycle here. And you can really see the power of this indicator where you lose exposure to drops, you buy back at lower prices, and you get exposure to big rallies like here. So this is something that we wanted to have.
Jed, so just to kind of briefly chime in here. So this is now live on the website. So on the last live stream, we talked about we're planning to launch this, but now this is live. If you log into the site, it is live. It's live for 600 assets. So I know we mentioned 6,000 because this is a lot of data. Going from 600 to 6,000 cryptocurrencies and having daily machine learning run through those models and figure out the indicator in terms of when to buy and sell is taking longer than expected. But right now it's live for 600, and we're hoping by the end of the week to have this ready with 6,000 tokens. So 6,000 tokens is coming, but currently wanted to make sure that this launched so you can still use it for the top 600 market cap projects on the site. Back to you, Jed.
Yeah, definitely. It takes lots of data, and one thing to mention is that this indicator needs at least 100 days of price data to come up with these good signals. So the very young and new coins that are coming out, we need to wait at least 3 months to be able to perform this model. And other things to mention, that these indicators are, like the name says, it's evaluating the trend or the momentum, if you like. So by definition, it will try to follow the price. So as you can see here, accuracy of these trades is not always very, very good because you are following the price in a way that I like to think of in terms of buying insurance. What I mean is that sometimes, for example, here, where you buy and then sell at a lower price, you do have a loss, and this trade is considered inaccurate, but it gives you this protection against this huge drop, which on the long term, if you compare the return of the strategy as compared to just holding the coin, has huge drastic effects.
Okay.
And also,
Dad, apologies. Quick question here from the audience. Jason on Facebook is saying, I have a question. Many trade signal softwares work well in trending markets, which are perhaps 15% of everyday market environments. The rest of the time, markets are ranging, oscillating, choppy. My question is, how will this software perform in the vast majority of non-trending markets?
Yep.
Great question.
Yeah, great question. And this brings me to this point here, where when we were doing research, first off, we did the machine learning and found out a good indicator, which is shown in here in the high frequency trading strategy. But then we realized that even using these adaptive moving averages, we're going to get false signals when price is ranging. And this was a pitfall of the initial model. But then we started doing more research, and we found a very nice research paper about fractal geometry and stock prices, where I explained it in the previous video, where essentially we are using this property of prices being fractal to reduce these trading signals when markets are choppy. However, that being said, you will still get some false signals when the markets are choppy, but the average loss on this false signal, like if I can show you here is a choppy zone, for example. So here we're going to have some false signals. Here you buy and then you sell at a lower level, and then you buy and sell. So this is over like 2-3 months. So you might think that you're trading more than you want to, but we're reducing it using this property of fractal geometry in a way that even if the market is chopping, the false signal will correct itself very fast. So here you bought, sold, and then you realize that, okay, momentum is going up again. So then you buy again very quickly. And the loss on this trade is very minimal compared to the gains you get from skipping big drops like this. So, in other words, the average loss on a false signal will not exceed, will be somewhere around 5 to 10%. But the average win on a winning signal, like skipping drops like this or catching rallies, would be more than 50%. So on the long term, this strategy, statistically saying, will very likely be profitable.
Jad, so could you speak and compare the holding ROI for that coin versus using the actual strategy, and why this is a game changer in our opinion?
Definitely. All right, so this example was Litecoin. So I can go ahead and plot the performance of Litecoin throughout the past, where we started trading in January 1st. So let's notice why this indicator is good. So let's see here these three first trades. All of these trades were losing trades, right? But because we sold and because we were kind of purchasing insurance against big drops, we're losing a little bit of money. But then when the big drops actually happens and we buy back at a much lower price, this has drastic consequences on our ROI. Look here how the red line is considered just holding the coin and the blue line is considering following the strategy. Look how when you skip drops, your return function is flat because you're outside the market. And thus, missing these big drops have big implications on the future return.
Now, could you go back to, was it SNX or Litecoin that you had open in a tab?
Yeah, this is Litecoin, actually.
No, I mean like on the site.
Yeah, this is Litecoin.
Yeah, so the total ROI versus the holding ROI. Could you speak to that and kind of what that means, that table?
Oh, okay. Yeah, so this table on our website will essentially be there to help you compare what if I bought the coin at the first day I had data and just held it all the way to today. And this will be your holding ROI, which means that you just buy it and never sell, and you see the performance over time. Now, the total ROI of the strategy.
Hold on. Sorry, Jad. People are saying, could you zoom in on your screen or browser? It's kind of hard to see. I think I think it's like Command plus in the browser.
Yep.
Again? Yeah. One more time? Okay, perfect.
Is this better?
Yes. Thank you.
All right. So yeah, so about this statistical table. So like I said, holding is just buying at the first day and they're just holding it all the way at the end. And you
Apologies, Jad. Just go down some more. It's being blocked by your name. Okay, there you go.
Sorry. All right. Yeah, so holding is just buying and holding all the way to the end. And total ROI in this table is just following this strategy with discipline, which means that you buy when you have a bullish sign and then you sell when you have a bearish sign. So following this strategy, buying and selling with these signals, you would have made 446% throughout this period. The same period, if you just held it, you would have made 17% on this coin. And accuracy is just showing how accurate each trade is. And then we have the Sortino ratio, which is a good ratio to see how.
Okay, so let's pause there real quick. I think that's something that's kind of mind-boggling, right? So customers basically should not really pay too much attention on the accuracy. They should pay attention to the total ROI versus holding, right? Because in that example, the accuracy is 40%, right? And people might say, oh, hey, do you know what? This model sucks. However, from basically the peak of the last bull run, right? January 2018, if you are holding, what is this, SNX?
This is Litecoin. Actually.
Litecoin, right? If you're holding Litecoin, you'd have made only 17% in basically 2 years, right? But if you follow the strategy, even though the accuracy is low, you would have made over 400%, right?
Yeah, and
that's
other things that are very important, especially for me because I come from a background with risk management and things like this, is this thing right here, max drawdown and volatility, which are reduced greatly when you follow this model. So this is still for Litecoin, and this shows that if you held the coin, your max drawdown would have been 91%, which means that at some point, when you look at your investment, you would have been down 91%. which for me would have been very, very scary. And if you actually followed this strategy, your max drawdown would be around 47%. So on your psychology, it's much better, and on the return as well, perform much better. So these metrics shown here are also very important to keep an eye on.
Okay, awesome. Let's take a few questions here from the audience. Just give me one question, one moment here. So Crypto Jedi says, did the plans upgrade today as well? No, not yet. That's something we plan to add once we've finished importing all the 6,000 tokens. So right now the plans are as is. So we have about 600 assets on the platform, and they all have the trends indicator. And we're hoping to have the 6,000 finished by the end of the week. It's taking a while because it's basically a big data challenge, trying to migrate everything from our test server to the production server. But everything is coming soon. Once that's done, then there will be upgrades. So the upgrades he's talking about is all the hardware plan will be bumped up from top 20 market cap to top 100 market cap in terms of access. Then the investor plan will be bumped up from top 100 to top 500 market cap in terms of assets. And if you're on the pro plan, you have access to all 6,000 tokens once they're fully live. Okay, let's take one last question here from Andres. I'm confused. I don't see the buy-sell signals on my low-frequency strategy. I think it depends on the coin you're on. As Jad mentioned, we have to have more than 3 months worth of data. So if a coin is newly launched, then we can't really create a trends indicator on it, because the models has to kind of go through and learn the data over time. Anything to add to that, Jad, in terms of why some assets don't have indicators?
No, it's exactly this. You need at least 90 days for the model to train and come up with signals. And one more thing is that sometimes if it's a young coin, you might have a buy signal and then you still didn't get any sell signal. So you would just have the straight line. So you need to wait for more data to start getting indicators.
All right. One last question from Wes. Is this still best used for day trading, swing trading, or long-term trends? Good question.
So that's why we have a low frequency. We have a low frequency strategy and a high frequency strategy. So if we look at the high frequency strategy and we go and we look at the max. So the difference basically is what I mentioned when we were trying to incorporate fractal geometry to reduce trades. So if you're worried about transaction cost, or if you're just a long-term investor, then following the low frequency trade would be better. But a high frequency trade adapts faster to price and thus trades more often than the low frequency one, but you would be able to get the indicators a little bit faster. So that might help in your ROI. But it depends on the investor. If you want to trade less and just hodl without taking too much risk when the price is going down, the low frequency is better. If you want to really try to catch the price action fast and are not too much worried about transaction costs, then the high frequency trading would be better.
Okay, great. Continue, Jad.
Yeah, and then we've had some requests to see if this model actually works for low cap coins. So I've actually went through some coins outside of the top 100, top 200 to come see.
Could you do more zooming in?
Yeah.
Some more? One more time? Okay, there you go. Thank you.
All right. So I have some few examples. So this is Horizon, for example, which is outside the top 100 by market cap, and we still have good performance following this strategy with less max drawdown and much better returns. And then you have Sandbox, for example, which is an example of a coin that has only been through a bullish cycle, and you can see that holding it would have been better, but the strategy still performs well. So one thing to note is that this is only a long strategy, so you're not shorting and you don't have leverage. So if the prices are going up, you can only do as well as holding the coin. This should be intuitive. But if there are drops like here, you do reduce your risk. And let's go fast through some more examples of smaller cap coins. So in this example, New Cipher, we actually holding it would have been better because you sell and then buy at a little bit higher price. But this is the price you pay for insurance. In my opinion, this would still be good. And then looking at smaller market caps, we have Raiden Network Coin, where we did have a bearish cycle where it had paid off to follow the strategy, and missing these drops would have also paid off. This is the COVID drop where we sell early, buy at a lower price. So this is good. And then looking at even smaller cap coins, we have Dragon Chain, which underperformed holding. However, you can see the drawdown here. If you held it here, you would have lost more than 50% at some point, and here you would have been flat. And then you're a little bit late to catch the rally, which I just explained why. But the performance is still good, not as good as holding. However, you do reduce your risk. Other very small market cap coins like Falcon Swap also outperformed. You skipped this big drawdown period, so you had good signals, and you did reduce your risk a lot with better performance. So these are just some examples.
Okay, Jed, a question from K.O. Caldwell. What is the frequency difference between low and high?
All right, here and here.
Yes, yeah.
So let's look here. Here is Litecoin since 2018 to today. So around 3 years. If you had followed the low frequency strategy, you would have made only 15 trades in total. Now, if you want to see the high frequency strategy, you would have made 23 trades. So we are reducing the number of trades without really reducing the exposure to big rallies, and without removing the fact that we are skipping big drops. However, this period here, where the momentum was fluctuating very quick, you would have traded much more than following the low frequency strategy, which here we only trade twice.
Okay, next question here from Tua. Very nice, but I would assume that my sell point should be on the top and not already when the price has dropped. Will this be included in future iterations to the model?
So we're always working on improving this model. That's for sure. But one thing to keep in mind is that you will not have the perfect model. That you will never be able to sell at the perfect time and buy at the perfect time. And if you manage to find a model like this, there is something called time decay. If it works extremely well, more people are going to discover it, and it will decay over time. The performance wouldn't be as good as it is. And this is a momentum strategy. So you're going to be a little bit late to the top, a little bit late to the bottom, but on long term, this would prove very beneficial. This is why I like to give the comparison to paying insurance, small payments.
Now, could you maybe compare this to the last market cycle, last bull run for Bitcoin and or Ethereum to see how it fared from calling the top and the bottom? I think that would be a good visual, if possible.
Since 2018?
Yes, yeah.
So
2018?
Yeah, so for now, we only have data starting this date.
And that's for which coin? Litecoin?
This one is still Litecoin.
Okay, do we have data for, could you maybe go through a coin, maybe Bitcoin or Ether?
I think we had for Bitcoin Cash.
Okay, all right.
All right, let's do max.
All right, as Jad is pulling that up, if you're enjoying this live stream, be sure to smash the like button, subscribe, and share this with a friend. Tell a friend to tell a friend. Cryptocurrency is the future of money, and we're all bullish on crypto, and we come here to you on our live stream to offer you value. So if you enjoyed this live stream, be sure to share this with a friend and smash the like button.
All right, let me show you here. All right, so this is a good example because we have data since 2017, at the beginning of the rally, the bubble, if you'd like, and then the big crash. So things to note: we did catch the rally, and like I said,
Could you zoom in, please, Jed?
oh, yeah.
Okay.
All right. So this is Bitcoin Cash at the beginning of the big rally in 2017. So we had a buy signal under $500. We held it all the way to 3,500. However, like you can see, it took some time for this indicator to give us a sell signal. This is because it's following price. And now it did take profits. And this is something that you will see using momentum or trend indicators. You're a little bit late to what you would ideally want, but if you actually look deep and backtest it, you would see that even if you're late on long run, skipping these big drops offers great consequences. For example, here we would have made 230% instead of 60%, and we would have still reduced the max drawdown. If you held Bitcoin Cash since 2017, at one point, you would have looked at your portfolio, which was down 98%, which would have been crazy because it was from here all the way down to here.
All right. Awesome work. Okay. Let's now. I guess anything else, Jed, before we go to Bill?
I think that's mainly it. If you'd like to know more detail about the math and all this behind, you can watch the video that we posted yesterday explaining a little bit deeper this indicator.
Okay, awesome. So let's now go to Bill. Bill's going to show how he's using this indicator as our chief technical analyst.
All right. Hi, everybody. And now the market update on steroids, courtesy of Dad and Quantine. One brief note, I did work some with Jad. Somebody was asking about false signals in a sideways market. We did work very hard on this, particularly with the sideways action from Bitcoin in 2018, where it sat at 6,000 for 3 months. So rest assured, we worked hard on that, and we used our machine learning to give you the best experience possible. And now let's talk how using these charts can help you. Now, this is Bitcoin. Obviously, you can see the bullish signal here in October. And what you'll notice is there was volatility up in the top right with no sell signal. Okay. So Bitcoin, big boy's trend is still intact according to the model. Now, if you match that up with TA, Bitcoin seems to be exiting kind of a parallel channel. That's these purple lines here. Elliott wave looks really good because Bitcoin has done that stop-start formation 3 different times. So if the market continues to go up, Bitcoin could be a leader. Matter of fact, I think the biggest risk to altcoin traders is that there is a Bitcoin catalyst that sends Bitcoin up and perhaps triggers profit taking in alts. But again, this is a conclusion that I reached from using both our trend indicators and TA. Now, just a brief note, MicroStrategy, Michael Saylor's company, is bouncing off a key support line. This sort of enhances our idea that Bitcoin could do okay because MicroStrategy, which is basically a Bitcoin ETF, given the amount that he holds, could move from 626 to 850. Now, let's go to Ethereum and show how the trend indicator could have allowed you to sleep better at night. As it turned out, in early March, the trend indicator put in a bullish signal right around a key technical point that I talked about frequently, near 1730 or 1740. Recently, Ethereum rudely dipped below 1740 and hammered itself down, I believe, to the 1500s, stopping everyone out, including me, on some positions. Then when this indicator came out, I checked out what it said for Ethereum, and it actually would have kept me in the trades, right? So I would have had more peace of mind on decline because the model never flipped. So the bullish scenario for ETH is still possible. Now, that said, ETH's got some resistance around 1850. So while the model is still positive, I'm still sort of waiting for ETH to get going. And I believe ETH needs to get going and soon, or this market could become Bitcoin only. Right now, ETH looks okay, and I'm hoping for the best. Now, conveniently, this was produced last night, and we've got a 10% rally today in Polkadot, which is possibly going to follow Cardano as the next FOMO trade, assuming the market continues to go up. One thing you'll notice, again, in Polkadot, no bearish signal up in the top right when Polkadot corrected to 30. Hence, Polkadot back up 10% today. So that bullish signal from November is still in play. Now, one thing that JAD does, other than develop cool computer models, is that I can give JAD, say, a group of symbols, say in the Polkadot universe, and JAD can use his skills in portfolio construction to build portfolios that are mathematically sound and diversified. So this is what we call a minimum volatility or conservative grouping for, yes, the Polkadot universe. Interestingly, this allocation gave 20% to Polkadot and 7% to Kusama, which, as you may know, has been mooning. However, to keep you from getting killed, it allocates more money to Polkadot. And then to give you some spice of life here, it adds 20% to a very small, very speculative coin. Let me say that again. Very small, very speculative coin that you should not FOMO into until you've looked at it thoroughly, called XRT, which is a combination like a robotics coin that is going to work on Ethereum and Polkadot. Now, interestingly, XRT is a fairly new coin, and there was a bullish signal on this coin in early March. So not only did it show up in a portfolio with the coins picked by me and the portfolio constructed by JAD, but we have additional confirmation that the outlook on XRT could be constructive. So this is an example of how two different people and three different indicators can be put together to help you build a diversified portfolio and play Polkadot without getting killed if the market goes down. Now, this is the XRT chart, just to be thorough. It looks like there was an initial wave higher and then a dip, and the level I would look at in XRT is 63. And again, be very careful with altcoins, okay? And I'll tell you why later. But I just thought this was a good example of what not only the trend indicators can do, but what team token metrics can do with the trend indicators. Because if we can do it, you can do it. Now, let's talk about some real rocket scientists from JAD and his group. And this speaks to the idea of paying for token metrics to buy insurance on your portfolio. Now, this is a very busy graph, but I'm going to draw your eyeball up into the top right corner. The blue line represents, I don't know, let's call it the alt season momentum indicator. In other words, are we in alt party season, or is the party maybe coming to an end? Well, if you look at the light blue line, that's the alt season sort of party indicator. And it seems to be rolling over aggressively. But that doesn't mean all coins are going to zero tomorrow. It doesn't mean 2018 is coming, but it probably does mean that if you made money on coins like Theta that mooned massively, you best think about profit-taking strategies. Okay? Bulls make money, bears make money, and pigs who don't take profits wind up with problems. All right? Now, how can we bring the low frequency indicator in, the trend indicator in, to help us with whether or not alt season is tired or isn't? Long-time live stream listeners will know that I was completely annoying when Litecoin was down at 50, pounding the table that alt season could get going with Litecoin as a leader. Litecoin is also a great indicator for Bitcoin and other big coins. Now, down in the bottom in October, Litecoin was one of the first coins to tick bullish, and the trend went from 50 to 200 something. Recently, Litecoin triggered a bearish signal on the decline. So the leader from the up move could possibly be indicating, some caution on the down move. Now, again, the market looks okay. Bitcoin and Ether are holding up. I don't want to be an alarmist. But if Litecoin ticks bearish and then other coins, like say Bitcoin or some of the smaller coins that you're holding, also tick bearish, this indicator could save you a lot of money. So much money that the price of a subscription to Token Metrics pales in comparison. So to conclude the market update, Bitcoin, ETH, and DOT look okay, but alts and smaller alts may be subject to serious profit taking. So bear that in mind as you manage your portfolio going forward, and consider using this trend indicator as a way to both catch trends and a way to keep you out of trouble when the market goes down. And that's the market update.
All right. Thank you, Bill. Okay, so let's now pivot and begin answering some questions before we wrap up the live stream. And by the way, if you're enjoying this live stream, be sure to subscribe, push like, turn on alerts, and share this video with a friend. Tell a friend to tell a friend that we have launched the trends indicator. Okay, all right, let's go through here in the comments and find some questions. Okay, from LB Stevens, will we really see a bear market like 2018 with crypto going more mainstream?
No, that would be my answer. I think if there's a risk in crypto, it's sometimes bull markets can hurt people by going into very wild ranges. In other words, there can be an initial drop. Everyone goes, the sky is falling, and sells. Then it goes back up. It's going to moon and make a new high. And then it goes back down. And you wind up with a seasickness that really hurts people's P&L and disgusts them. A lot of people expect a bear market like 2018, and I don't think that's going to repeat itself.
All right. Next question. Does Token Metrics act as a breakout predictor? Jad?
Yeah, so we've been working on adding some volatility indicators, which essentially means that we can incorporate it in our signals to be able to determine better if there's a breakout that's going to happen, if not. And this goes back to the work that we did with Bill when we were trying to reduce the number of trades where the price was choppy or ranging, if you will. So this would be incorporated in the signals as well, so that we don't really trade when a breakout isn't about to happen, and when we believe that a breakout might happen, we would like to act and trade. So this is in the works, and it will be included in the indicator.
Okay, awesome. Next question. Somebody's asking if we can showcase this for Helium. Yeah, actually, let me pull this up here. I do have this here on my screen. Okay, so let me move this off the screen. So this is the indicator for helium. So looking at the last 12 months for the low frequency, let me zoom in here for everybody. Okay, so it's basically been bullish on helium since it was at $1.50. Helium is now at almost $10, and that's the low frequency indicator. If we go to the high frequency indicator, let's take a look. So same thing, also is bullish. It was bullish at $1.38. So as Jed mentioned, the high frequency will be earlier. However, it will do a lot more trading. So far, looking at this, it's only had 3 trades though in the last 6 months. Let me switch to 12 months. Excuse me. Okay, so in the last 12 months, it's done 5 trades. So in this case, it's done slightly more over trading, but as Jan mentioned, this is kind of like acting as insurance against any possible crashes. And going back to the low frequency strategy, this has only done 5 trades in 12 months. So pretty much about half the trades. So we made both options available for those who want to trade less often. And if you don't care about transaction fees and just want to make sure you're always early, then the high frequency indicator works best for that. So I hope that was helpful. Okay, let's continue to the next question. Dan the Man says, do you offer any alerts? Also, could this also be implemented into TradingView as a script for Tokenmetrics customers? So the next thing for us to work on is turning this into alerts. So turning this into SMS and email alerts for our customers, depending on the plan. SMS alerts would be for the Pro plan, and email alerts would be for the Investor plan. So kind of like how we have alerts on the watch list. So yes, this is something in the roadmap. Okay. Then a question from Jason. Do we have access to the historical data of each chart? Right now, not for each chart. I think we have data from around 2018, but we are working on being able to get data all the way back to 2013 if an asset has that, but that will take some time. Okay, let's see if there's anything else here for us to answer. I think Ravi says, do we have to manually make these trades? Yes, for the time being, you do have to manually make the trades, but in the future, we would like to be able to automate the process. So whether it's through directly having integration with exchanges on our own platform, or whether it's through other products, we'll definitely keep you posted, but it is something we do want to focus on. Okay, Dan the Man says, good job, Jad. Keep up the good work. Yeah, absolutely. Great work. Jad, Bill, the whole team. Okay. Then we have a comment from Akadus. Amazing what you guys have developed. Thank you so much. Okay, question from Forever. How much is this indicator? So if you're already a customer, there's no changes, right? If you aren't a customer, let me pull up the pricing page here. Let me bring this back up. So we do plan, as mentioned, at the end of the month to change our pricing. So if you've been waiting for I don't know what to join, now is probably the best time to join with this update. So we have 3 plans. We have the hodler plan, we have the investor plan, and we have the professional plan. So we do plan to make changes to the plans because we're now offering more value. As mentioned, hodler will be bumped up this month from top 20 to top 100 market cap. Investor will be bumped up from top 100 to top 500 market cap. And the Pro plan will have access to all assets. And we're planning to bump that up to 6,000 assets on the platform. And we're also launching Tokenmetrics TV this month. And we also have a daily newsletter. So we're offering so much value and want to make sure to our customers that you're getting as much value as possible. So if you join before the end of the month, you'll be grandfathered in with current pricing. But if you take a while to join, if you join after the end of the month, then unfortunately you'll have to pay the new pricing. So now is really the time to maximize and join if you've been on the fence. Okay, let me kind of pause there. Bill or Jed, anything else you guys want to add that we haven't covered yet?
I think from my end, I'm good.
Okay, Bill.
To reiterate what I was saying earlier, and taking into account customer feedback that I need to get farther away from my mic. But then again, maybe I don't. Portfolio insurance and knowing when to get out is important. A lot of people say I'm going to hodl until it goes down 40%, and then they wind up selling. So this can help you manage your P&L. And I think it's really important for people to see it not only as something that can get you on moves, but to get you out so that you can maintain two things. One, your sanity, and two, your trading capital. Because if your head is not clear and you don't have any trading capital, you can't predict, you can't participate in crypto, the future of money.
All right, thank you, Bill. Next question. Which subscription is good for first-time users? Good question. So the most popular one is the investor plan. That's the one most customers are on. So would likely probably recommend that plan because that's the most popular one. And I would say there's a good fair share of our customers are new, especially after the pandemic, to some who've been with us since 2017. So I would say it's about half and half. So the investor plan is probably the most widely popular plan for new users. Okay, people definitely want integration. Unfortunately, we don't provide portfolio reviews or personal calls. If you want, now we do have a weekly webinar with our customers on the professional plans. So if that's of interest, we highly recommend you join that plan. Okay. Can you pay with crypto? So not at the moment. That's something we are working on for Tokenomics 2.0. You'll be able to join using crypto for that version. It will be only for the annual plan. Okay, so we have Shakir. I just upgraded to the Tokenomics Professional plan. Looking forward to it. That's awesome.
We just
Congratulations.
landed on the moon and the land bomb.
Welcome aboard. We actually have a call today as well. So if you joined, make sure you check the email to join the call. The call is at 4 p.m. Eastern time. And typically the calls go for 2 hours. So weekly 2-hour calls with the whole team, with Bill, myself, Jad, our developers. We'll be going through our watch list on the top cryptocurrencies we like so far, and also the ones we've been sharing via code reviews. We'll do a deep dive into those. Arrow says, Ian wore a jacket, which you know means he's excited. Well done, guys. Can't wait to dive into this. Yeah, thank you. Thank you so much. Okay, all right. I think that's pretty much it. Let me see if there's anything else we missed here. Okay, Girthy Green says, glad I bought a year plan a while back. Yeah, that's called thinking ahead. So great news. Thank you so much. Ibro says, recently signed up. Ian and the team do a great job in general. Are there realistic price predictions matrix for each coin? Oh, wow. That's a good question. We have, right now it's been manually done by Forrest on our team, but that would actually be something great to automate. I mean, maybe that's our next project. We'll definitely put that up on the team project board. I mean, because there is a way to actually automate that. I didn't really think about it, but that's crazy. I guess Bill or Jad, any comments on that?
I think that's a good idea. I mean, the realistic price predictions of Forest are so good that if you can manage to do it for most of the coins, that'll be amazing.
Yeah, because he's basically using trend lines on the market cap versus the trend line of the project using log, right? So we can definitely automate that. So we'll add that to the list. So Ibro, I think so. If we launch that, hit me up, and we'll give you a free account for life. I mean, because we love our customers and we always like getting feedback. So that could definitely be a huge game changer. So just email me. Okay. Lots of fans of Bill. Bill the man says Shadow Man.
Thank you. Appreciate it.
Okay, then Joe says end of March or end of April? End of April is the deadline to join before we change the pricing. Okay, all right. So I think that's pretty much it in terms of main questions. Main reason I'm here, the guy, a genius, give the man a pay raise. Absolutely, absolutely. Okay, all right. Well, thank you so much, everybody. It's been a pleasure. We're mining helium is slowing down our internet. I don't think Bill's mining helium yet.
No, my equipment's coming.
Yeah. Okay, so let's do last words. Any last words to our audience, Jad? You want to share with them?
Not really. It's just that the indicators will be live, and it's definitely helpful. Like I said before, not all the signals will be 100%, but if you keep that discipline in mind, don't let your emotions change your trading strategies, that on long term has huge consequences. So I hope this will be helpful for people in general.
All right, Bill?
Well, get involved. Sign up, join us. If you're new, you need to learn. We've got tools like this that can help guide you. If you're an advanced player, we have tools to help you manage P&L and risk management. At the end of the day, sign up, join us, get involved in crypto, and we give you a way to do that in a responsible, intelligent way. So come on, see us.
All right. Okay, actually, one last question here. I forgot there's a super chat I have to answer. Hi, Ian. What % of your portfolio would you put into helium plus Matic? I've been following you since 2017, plus a professional token metrics client. Also, how long do you think this will last? Good question. So I'll just tell you where things are currently. Give me 1 second to pull up my portfolio. So currently, Matic is about 13% of my portfolio. Matic / Polygon. Helium is 8% of my portfolio. So that's, plus I'm also currently mining it, right? So that number should go up. But I do wish I bought more, because honestly, helium should be like 20% of my portfolio had I bought in deep a while back. Then how long do I think this will last? I think we're all optimistic on and bullish on crypto till end of the year. I know Bill and Forrest do expect a correction sometime in the summertime. I think the phrase is sell in May and go away. But I do think there'll be a chance to come back. And I think maybe end of Q3, around October or so, basically around Halloween, there might be a possible correction. But at the end of the day, we're all just kind of speculating, right? Crypto is a totally different animal where anything can happen. Now, in terms of final words to our customers, thank you all for the feedback and input. This would not be possible without you. So keep on giving us the feedback. Keep on supporting us. We appreciate that. This is something our team has been working on based on your input, based on the feedback from the price predictions model. So this trend indicator basically has replaced price predictions, and we think this is a lot easier to use. We think it's so easy, anybody can use it. Even your grandparents can use this indicator. And the more feedback you give us, the better the platform gets, and the better we want to provide value to all of you. So thank you all, as usual. And as we like to say,
We just landed on the moon in a Lambo.
the moon is not the limit. To the moon and beyond. We'll see you on the other side at tokenmetrics.com. Thank you all.
Thank you.